Okay, some deep signals could be suggesting a potential floor, but I would like to go ahead and revise them with you here. Okay, so let's go ahead and get started. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a COSM technicals, raw price action, and statistical thread of analysis on this happy Thursday, actually. So the last day, right? So tomorrow is not, the markets are not open. Please remember, okay? So before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, so yeah, guys, so COSM on the daily, yet again, touching down at that very bottom target. Man, actually, it went to 297 this time around. But please do remember that this is a critically important support level that we have used before, before actually launching to massive upsides, right? So this iteration here, huge upside. This iteration here, of course, and even here where we touch it, just barely, so slightly there. We got that touch there and continued on to the upside. And even the most recent one, we came right back down to the area of about, let's see, that was a low of 291. So very similar to what happened, right? So there could be a situation to where we're looking at this, right? It kind of happened yet again. I mean, it is a high potential here, okay? So I'm going to go ahead and go over a few things that are kind of indicating that probability. Okay, so yeah, let's go ahead and move on to the next chart and see what we have. Okay, so starting from the 5-day volatility versus momentum backtest here. So this is actually something that happened only about 5 times throughout the entire trading history of the COSM asset in the 5-day chart, right? So that's 1, 2, 3, 4, and yeah, just actually 4 times. Wow. So, actually, you know what? We did have, well, this, I guess this would be the 5th time, the last one that we actually got, this one right over here. And the only reason I haven't actually counted it in just yet is because we never actually, well, I guess we topped out, so I can just count it in right now. So now that makes actually 5 of 5 iterations, right? So 5 of 5 iterations. Why? Because of this. Okay, so I noticed that there's a couple of jokers out there who don't understand exactly what I'm doing. So this one goes out to you. Okay, so pay close attention, and this is what I mean. All right, so anytime that volatility has actually expanded into critical volatility, which is within the 90 percentile, and started a contraction phase to the downside while momentum was making an upside pivot, I have taken a back test, throughout the 5-day chart. I'm sorry, with the 5-day chart throughout the entire trading history. Okay, so meaning from the, I'm going to be very, very explicit here. Okay, so the opening of the candle. So I'm not doing it wick to wick basis. Okay, so what I am doing is actually opening from the candle to market high. Okay, so just like this here. Okay, please notice that this is the green line where I noted the iteration, right? So this is the sample that I took. So the opening of the candle right down here to this area here measured about a 28.05% move over the span of about 22 days. And this was right when volatility started to contract and right when momentum started to have that that upside bias, right? This right over here, right? So let me just go ahead and put that right back there. There we go. And yeah, so now I went back, right? I continued further back, and here's another one. Okay, so I just want to show you that that is in fact what I'm doing, and I'm not coming up with it. Okay, this is this is really a serious back test. Okay, so here's another iteration when we were at critical volatility and started a contraction phase and paired with momentum to an upside pivot. So from the opening of this red candle, so please remember that the openings of the candles for red candles is above and the opening for the green candles is below, right? So you can also tell here the opening, high, low, and close, right? So when I hover over that candle, you can see that the opening of the candle was in fact 113.75, right? So from 113.75 to the top side of this candle, which is the H on that metric of, to the top left, is 187.25. So this was a 64.59% move to the upside over the span of about 28 days. Okay, so and here's the next one. We were at critical expansion right up there, started that contraction phase, and then we actually started to get that upside pivot on the stochastic oscillator, right? So again, from the opening of this candle to the top of that candle, and I'm pretty critical about these things, so I'm very, very precise within that, okay? So that's another back test, right? And the last one, of course, it was back here. So this was a 468 spot, 40% move to the upside from the opening of this candle here, which was again 3750, right? So 3750 would be right in here, and we took it to the top side right over here. When this is when I stopped it, just in case you're curious. Okay, so the back test I ended right up here the moment that we pierced below the 15th percentile of contraction. So that's essentially the completion of the move, starting from the upside pivot here, right? So regardless of the movement that I actually got from the stochastic's momentum oscillator, I took into consideration that this was one massive expansion to contraction phase, right? So I took that phase into consideration, and I got this backtest: 372 days, 468 spot, 40% to the upside. That concludes the sample set for the 5-day backtest. Please notice that this was the one right here, right? It made its topside move. And this was the one here, made its topside move from this iteration. Of course, we just got the 5th one right over here. And why is it the 5th one in a row? I'm speaking to you, brother. The one that said 5 tests my ass, right? You, brother. I'm speaking to you. I hope you're still here. Check this out, okay? We went all the way to critical contraction, right? So when we're in critical contraction, we got an upside pivot in the stochastic's momentum. And based on that move, we got the move from here to here, right? So that's basically what I'm saying. So that this was now, I haven't even taken this one into account, but it doesn't matter. It's okay. It's only one iteration, right? So the opening of this candle here, which is 183. So, I mean, I can get at 182 for now, right? I'll be more precise later. To the top side of this candle, which is high 2113, right? So 2115 will have to do. This was a pretty ridiculous move here, right? So that was 1,059% to the upside over the span of about 14 days. So now this marks, right, just like this. I would go ahead and leave that there. Make sure to color that in green. And this now marks the 5th iteration of volatility, of volatility versus momentum pivoted towards the upside, right? So yeah, so that's that. And in fact, it looks like we have missed another one here too. This here is actually an upside pivot. Please go ahead and notice that we had an upside pivot here contracting from critical volatility. So that's yet again another one. So in fact, it's 6 out of 6 times that it has marked it perfectly. And in this particular situation, we can take a metric out of that as well. So the opening from this candle, meaning the moment we started contracting here, as long as we do have an upside pivot, that's the good thing to pair with, right? So in this particular situation, we had an upside pivot, we had ADX, or we had DMI support here, meaning that we were in the bullish control zone, meaning that the bulls are in control with a trend higher than the 25 percentile, right? Higher than this percentile here. So an increasing trend, meaning that it's a strong bull trend, right? So in this case, I actually took a back test just like this. So opening of this candle, 362, 363 is fine, right? So we'll take it right up here to this next candle, which was high of 744. Because that was the top side of it. What I mean is by this, it's just, it doesn't matter that this went all the way up there, because you can see that that's actually a lower candle than it is this one here. So we take into consideration the high. In my particular strategy, I take into consideration the overall high. Okay, so 743 is close enough. 744 is the actual high. So this was 104%, 104 spot 58% move over the span of about 7 days. Okay, based on contraction versus upside momentum. Okay, so this in fact now makes 6 out of 6 iterations with a 100% accuracy. Okay, so this is going to change just a little bit as well, right? So we do have 1,000% move. This move was the one that went up to $23 or whatever that was. Right. Oh, actually, no. This was the one that went up to before the split. The split was right over here. Okay, yeah, I remember now. All right. So yeah, that's what I'm talking about here, man. It's just I just they're in plain sight, right? It's just historical data. You just kind of back test it, and it gives you what it will. I'm not trying to bullcrap anybody or trying to bamboozle anyone. The data says what it says. So, and in fact, I think it's pretty good that you did say, 5 tests my ass or whatever, but it's all good. This is a good thing for me to be able to show you just my transparency in this. I'm not coming up with the data. The data really is what it is. Okay, so the percentage here would actually be reflected based on the sum of every iteration divided by the correct iterations, meaning that it would be the sum divided by 6 iterations total, and that would give you the standard deviation. That would give you your mean. Right. So, and now your average duration, of course, would be the sum of all 6 days total time traded to fulfill that upside divided by the correct iteration times, which would be 6, and that would give you your average duration as well. And this is why I include proof of work. Right. So, yeah, so that's kind of like what I'm looking at here. I'm sorry that the video is going a little bit long, but this is important for me to explain. OK, so it's just another situation here that's kind of like leading towards an upside. Another situation here, guys, please remember that this is the 8-hour contraction to expansion back test, right? So these are incorrect iterations. That's how I mark them red, right? So these are the good iterations. So anytime that contraction, critical contraction within the 15th percentile has started, or anytime that we have contracted into the level and then started to expand to the upside paired with momentum to the upside, I have taken note of every iteration too in the 8-hour chart in this particular case. Okay, so 8-hour chart throughout the entire trading history of the COSM asset, all these iterations here beyond the 15th percentile. We want to be beyond it, right? So, and then with an upside thrust of volatility paired with that upside thrust of momentum, I have come up with a backtest of 9 total iterations, of which only 6 were guessed correctly to the upside. Okay, this I'm talking about is not my opinion. It is the statistic. It's not me. Okay, so what's very curious here is that this is another signal firing off. Okay, so we have 6 iterations gives us an averaged upside accuracy of 66.66% with an averaged upside thrust of 206.895% over the span of about just 6 days. Okay, so what I am looking at here is this. Okay, please notice right here in momentum, we're starting to get that pivot. Okay, so they don't always work out, right? But it is a pivot, and we're starting it like this. For example, here, right? We got that pivot. For example, here we got that pivot, came back down, right? So and right here too, right? Even right here, you can see that these pivots do happen. Okay, sometimes they go back down, sometimes they go up. So this is why we gain the probabilities game instead of it being certainties, right? This is why it's set as a statistic, because it's not the accurate number. It's 68% of the results landing within that 206.895%. Okay, so this is your mean. It's just at the center of it. Okay, so I'm sorry. Yeah, it's just your mean, the center of it. Okay, so I'm not giving you the lower end of a first standard deviation or the second. Okay, so I'm just giving you the mean based on the iterations divided by the correct. The iteration thrust divided by the correct iteration count, right? In this case being 6 out of the 9. And same thing with the days reflected. Okay, so that's another signal that's kind of signaling a potential upside continuation. Now, in order for this to actually be signaled to the upside, we need a few things for the conditions. Okay, we do need both of the volatility component and the moving average, both upside of the 15th percentile with an upside pivot alongside the stochastics momentum and maintaining that upside pivot as well, right? And it would be great to also get DMI support. Okay, so from this area here, you can see that there is starting a pivot here. You can see that the trend is starting to kind of reverse here. So as soon as we are above the 25% of trend, that would give whatever the bears or the bulls the strength, right? So 25% and up would be a trend market, okay, or a market trending. Okay, so meaning that if we have 25% and up with the green line above the red line, then that's bull territory. Okay, but in this case, I do see it as indicative of a continuation to the upside Soon. My apologies. Soon, because of this being at contraction and because of this being at oversold percentile. Okay, and please notice that we are at oversold and starting a pivot from historic lows. Just look at the cursor all the way left to right and right to left. Right, it looks like we haven't gone too far down from the current area. And this is how I run my back tests, okay? I'm not doing this based on my opinion or based on whatever catalysts that there are or based on any fundamental metrics. This is why I say that I don't look at fundamentals. I just look at the data, okay? And the data is something that the institutions also practice. So if you have systematic institutions, they're definitely practicing stuff like this and even further, just like me. This is not the only backtest strategy I have. I have many more. And I also develop algorithms that backtest for me. Okay, so let's go ahead and now continue on to the last part of the analysis. Okay. Right. Just one quick thing here. 8-hour time frame, since it is suggesting a potential continuation here, the mean reversion that we're looking at based on an 8-hour would technically be at about $3.46 per my algo. Okay, so this is the ARC reversion variant, and this is, I mean, the Bollinger Bands are actually the cloud, right? The blue area. It's very curious that we actually failed the Bollinger Bands and then came back up to close right inside of them. So we literally got it back. What I mean is that we recovered the inside of the Bollinger Bands, and this could be indicative of a continuation to the upside. Okay, so the fact that you're starting to get the Bollinger Bands to open up like this, as you can see, that is an expansion phase, which is what we just spoke about. We're starting to expand. So this is why you're seeing the Bollinger Bands expand here. Bollinger Bands are essentially volatility. Okay, you guys, so I'm giving you things that I am literally giving on my master's course right now, okay, just directly to you. All right, so this is, by the way, I still have a few seats available, so go ahead and find the email in the description below and send me that email and we'll get you enrolled, okay? So this is kind of what I'm seeing. Very interesting hammer candle here on the 8-hour. Could be a shakeout, but as well, we have to continue validating, right? So, yeah, please notice here that we have an upside pivot on that 30-minute. We do have some consolidation on the 4-hour, consolidation on the 8-hour, which is indicative of a potential floor being found, right? Same thing on the daily, and I mean almost every time frame at this point, right? So the buy daily showing a little bit bearish, but please notice that we've been bouncing around this area quite often, and the 5-day is showing that consolidation as well. Okay, so if we can trail the upside, it could start with the 30-minute time frame and help the upper time frames kind of topple into each other and face the upside little by little, right? So it will depend on volume. It will depend on the sentiment, right? So it just is just. I'm just saying that there could possibly be a floor found within COSM. Okay, please remember most importantly that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever. Okay, you guys, do your own due diligence and everything will be cool. All right, so with that said, please remember the markets are closed tomorrow, Friday, and they will be opened again on Monday. Okay, you guys, in observance of the Good Friday. Okay, you guys, yeah, but with that said, I wish you well. Very good night and long weekend if you do have it, and I will catch you at the bell on Monday. Adios.